Thursday, April 4th, Stan Ehrlich market analysis and stock market indexes I start out with, and then go into futures and sometimes some other stuff, sectors, forex, crypto, cycles. So we have a pop up this morning, a gap up this morning, and I'll zoom in a little bit to show you our current tick is almost exactly where it opened. So it opened and came down just a little and came back up to where it opened. So the body is very thin relative to the opening, and we're close to the high of the day, which is very close to a new high for the whole trend. A very dangerous spot. I was expecting a double top. I did not expect it to pop up like this morning. But if it fails at this point and comes down, then I'm still alive as far as my bearish expectations are concerned, and they are still alive. My first downside objective on the spider is going to be closing this gap, and that would be down to about 497, which is not that far, but yeah, about 30 points, a little 25, somewhere in there. And that's just the beginning, but it's probably halfway. So not the beginning. Now, what I really am looking for, and I've added a couple of major features this morning to my spider chart, and they are the Fibonacci percentage retracement levels. I want to point out something. On October 13th of 22, we had a ER buy signal at the very bottom of the bear market and the beginning of the bull market. So that's where my Fibonacci line starts up to a very prominent high, which of course we got a sell signal on the rally high. Wow. Okay, so the downside retracement of the 382 it did get reached a few months later, and almost to the 50% retracement. Those are the two I'm particularly interested in now, because those two levels are going to point out that you're going to get down to 480 if that comes to pass. My expectation, I've been saying for a long time now, 477 is close enough. But I also have the 50% retracement potential of 467. Anything in this ballpark from 480 down to 70 or a little under 470 would be fantastic in terms of my expectations. And it's going to take a month or two. So let's see what the 1 minute chart looks like. Well, we actually made a new high for the day today, but it's failing at the moment. But I can't say failing. I mean, we're still up 390, but it's again in very, very thin air around where it's topped out now for maybe the third time in the last, what is this, a week and a half, 2 weeks or so. Let's see what happens. I did get my gap closed. Yesterday's rally came up within 2 ticks of closing the gap exactly and turned down. So that was good. But then this rally this morning took me a little by surprise. Next chart is the E-mini. Same kind of comments, but we're very, very close to the highest closing price and or highest opening, and not too far away from the highest highs also. So this is an area that you have to watch very closely. If we get above this area and close in total new high ground above all previous rally highs, we're going to start another leg up again. But if that doesn't happen and we do start to drop off below Tuesday's low of this week, then you've added another day or two more of time and you're making new lows for a couple of weeks plus. And that could get a lot more bearish. So this is very critical. E-mini, 1 minute chart. Remember, doesn't close but 1 hour. So yesterday afternoon, around unchanged, an hour earlier. And up you go. And during the early morning, 5:30 California time, it popped substantially. Probably some, bullish fundamental news. Let's look at the next chart. Let's look at the QQQs. Same story. So very critical as to whether we can maintain this kind of strength and close above previous highs. Then we'll see a bit more upside follow through and another step up like this index, all these indexes have been doing since last October. Nice rally, small correction, not typically as much as you'd get. Big rally, small correction, big rally, small, again and again. But there's a little bit of indication coming in here, creeping in very slowly, that the upside momentum may be rolling over. Again, very critical. You watch here in the next hours and few days, maybe a week. Depends on how quickly it does what. And I'm going to pass on the 5-minute QQQ. The NASDAQ QQQ futures contract, the June, up near its highest closing or highest opening levels. Almost exactly today's high is at the high of any body. And notice they're not red or green, they're white in this last month or so. That simply means that they weren't overbought. It doesn't mean that the close was higher than the open or lower than the open or whatever for your red-green standard candlesticks. These are custom colored. So what we've got, a little line I put in here this morning across the high of highest openings or highest closings, doesn't matter. And all we see is a little bit of wicks, which means it got there, but it didn't stay there by the close or on the opening, whatever. So very important here. Next, 1-minute chart, actually 5-minute chart. Let's see what happens. Now, I'm going to pass on the Russell 2000. Bonds deserve to rally a little bit. Got almost oversold. Do you realize it came down yesterday to an RSI low of 25.06? I've got to hit 25 or lower, or it doesn't turn yellow. And I didn't get oversold, so it came super close. And approximately where it bottomed out before, plus the closing price yesterday, like the day before yesterday, after testing support, came back decently. So we're seeing very little upside follow through. Remember, I'm really not super bullish yet, which I will be probably in the next couple of months. But I think it's going to go down to the bottom of the channel first, which is, 115, maybe even 14, if it takes a couple of weeks. 10-year notes. We are at a support level. We dropped below it last couple of days, but stayed at the bottom of the support level on a close or higher. Today, we're doing the exact same thing. At the moment, we're smack dab at that support level. And if it breaks below it, we'll have another little bit of a leg down, which I think is quite possible. Remember, we had a double top. The first high was December 27, then the second high was almost as high, February 1st. I measured the depth of the formation and cast it down to this downside objective of 105.28. Let's call it 108.28, 109 flat. We're not very far away, only a little less than a point. So that is my minimum downside objective. It could go a little further, but I think it hasn't got a lot lower to go. And I'm going to try to pinpoint the bullish turn to the day, of course, like we did back here on October 23rd for the 10-year notes. Next, got the 1-minute chart, 5-minute chart rather, on the notes. Nothing here of any major consequence I can come up with. Next, crude oil. Got overbought Tuesday and Wednesday and somewhat today, but it may be starting to work its way back down out of an overbought situation. Now, we never got up to the resistance area. You don't necessarily have to. And this correction may only come down a little bit to close a small gap on Tuesday, of this week. And there's support below it. So let's see a small move down to about 82.79, 82.80. And then maybe it's going to turn around and go back up again. That's still inflationary. This is crude oil. And the Fed doesn't like that. It's trying to control it with interest rates. And the stock market loves lower rates, not steady to higher. So this is a supporting factor for potential little bit more of a dip in interest rates and indexes. We got the natural gas trying to bottom out in oversold condition. Not really doing a very good job of it. Resistance is above the market, got into it the last day or two. Now it's starting to pull down out of it. Currently below that support level by a little bit. So let's see it test the lows and make new lows for natural gas. Now, we still are oversold within the last few days, and that might turn it back up, but it doesn't seem like it. So I'm neutral to a little bearish, probable test of lows, probable slight new lows very soon, and gold. Oh my, straight up, big move up here, especially starting on March 1st. It's been over a month. It did stall out for a couple of weeks, but these are two huge, real big rallies. Not that the gold market hasn't done this before. You can look back here when we caught the bottom to the exact day. October 6th started a really sharp big rally, similar to what we've done. There's other rallies that we also caught the low of the move here on February 28th, and a little correction before it took off like a bat out of hell. And it's done it before. But the size of the rally is pretty similar to previous ones. I'm expecting this overbought condition, which is extreme, to cause it to top out, as I've been saying for too long, but I'm going to try to catch the exact day it turns. I can't help but be expecting a major turn down very soon. Silver. Wow. Same thing. I had a great sell signal. It worked for a few days on March 21st, but that's all it did. It worked for a few days. Previous one was fantastic on December 4th. Big move down. And several in the last year, 2023, tops and bottoms were fantastic in both gold and silver. Whopper of trades. Now, gapped up this morning. Exhaustion gap, I think. At the top of the resistance area, still having trouble up here. Right around the same highs of a double top formation in silver way back in April of last year and May 5th of last year that worked outstandingly well. I don't think we're going to have the same thing this year, but I do think it's about to top out. Next, platinum. Up against a little resistance, almost, not quite, but it just can't quite get to overbought yet, but still gapped up. When you see these gaps, there's exhaustion gaps, and that's the last gasp on the way up or the last gasp on the way down. There's midway gaps, and they're fairly rare, and you can't tell they're midway gaps very easily when they happen, so it's after the fact, a little late. And there is breakaway gaps. That means the market typically was dribbling around in a formation and all of a sudden jumped out of it like crazy with a gap. So that's breaking away from some sort of a bottom or top, and that could be bullish or bearish. This looks like a possible minor, not a big deal so far, exhaustion gap. Got, the other metals have got it. Next, copper. I started talking about this head and shoulder bottom a couple of days ago, very late. I usually see these things a lot earlier than that, but I didn't. So I put in the shoulder markings in the head and the shoulder and some other annotations. The neckline, of course, the depth of the formation, you'd simply duplicate that and put the bottom of that stick, so to speak, on the breakout day, which I did. And here's our minimum upside objective I've been looking at for a couple of days, 4.3770 to be probably way too exact. But if I get there or higher, I'll be very, very pleased. And here we are gapping up like crazy this morning. I didn't expect it to be that strong, that fast. But now we're overbought again. Gaps are almost always closed. So very soon, I expect it to slip down, close the gap, turn around, and go back up to new highs. Next, soybeans. Remember that I'm still bearish on grains, but there are some slowly developing possible bottoms. I'm not in a hurry to get bullish. I don't see anything at the moment that's causing me to talk bull. So I'm looking for a test of the lows, looking for new lows in soybeans. Some of you guys might remember me, my comments way back here in July of last summer when we were at the highs, and I was screaming bloody murder. This is an extremely big possible double top formation on a very long-term basis. And it sure as heck looks like it's turned out to be exactly that. But I have to see new lows on a closing basis. Soybean oil, basically the same situation. Over a substantial amount of time, couple of years, lower highs and generally lower lows. Now we're in progress of probably getting down to these previous lows at 36 and change. So I'm looking for this move to come down to support. It might bounce around a little bit before it breaks below the support and then drop off to even lower lows. Right now, I just can't justify yickety-yakking about a major bullish formation quite yet. And I think I see what you think, you know, a little low there and a little low there and a lower low there. But yeah, let's wait to see. It'll tons of time. This is huge, but I don't think it's going to work. Next chart is soybean meal. And it's about to break into new lows, kind of like soybeans already did. So I'm looking for the support level to be tested again, and I'm looking for lower lows very, very soon. Let's look at the corn market. It's done that already, along with wheat, and corn broke into new lows for quite a long time period, since the early part of 22. And here we are, you know, April of 24, so a couple of years. And we have lower highs, lower lows, and this last vestige of supply, I only loaded 1,000 days here, so we don't know what happened before that, but not at the moment that important. Support long-term did hold a month or so ago, and we did get a bullish engulfing on the bottom exactly. That was one of my favorite combinations. Major support, oversold conditions, and a bullish engulfing. Yay. Nice trade, nothing fantastic. We're flat. Now we're moving back down into the support level again. So let's see if we can't get a buy signal for a little further rally. I have my serious doubts. So I got to see it first before I talk about it. Otherwise, neutral to bearish. Wheat, neutral to bearish. Same thing. Rally coming up to resistance, sell it. If it doesn't go up to resistance, well, it doesn't, and it may give us another sell signal, but I got to get overbought first. I got to get a little rally first in order to get that condition so I can get a sell signal. And I don't even know that it's going to do that. I'm just basically bearish in grains across the board for a variety of reasons. And it won't take long, in my opinion, for new lows to occur. So here we got cattle. Last several days, dropped off very sharply. We had a great buy signal back here on February 15th and rode it up until a week and a half ago and finally got bumped out. Great trade. Now we're flat. Oversold conditions in the last several days caused me to believe the market is likely to rally some. I don't see any support right here. I don't see any great reason. Nope. Yeah, you could say that previous low here. Okay, I'll draw you a little line across that point in time, right across that. So yeah, maybe. But that's stretching it. It's no big deal. And it's been working for, it's, you know, bounced for a day or two or three. So small rally, okay. Let's see what happens next. Trying to justify a small rally short term. Hogs up against resistance, probably going to stall out in the resistance and turn back down. And now I'm going to go to TradeStation because the ICE exchange is trying to overcharge people for their data feed, and we're having trouble with Ninja's ICE data feed, ICE, International Commodity Exchange. I believe that's what it means. Here we go. RBOB is unleaded gas, and it just made another new high for the trend in the last couple of days. It's got some support a little bit below it, and it has been stair-stepping its way up pretty nicely. So I have to be looking for a minor turn back up again, probably very soon. We're not overbought anymore. We were, and we did have a correction. So that's done. We got close to overbought, but that doesn't quite cut it. So after maybe a little bit more of a dip, then probably new highs. Next, OJ. Just can't seem to get a trend started here since the last significant top. Very big broad top may possibly be forming, but it's going to take a lot more time, probably weeks or maybe even months, for it finally to start trending below 290. Next, Cocoa might have topped out. I didn't get a sell signal. I'm so sorry, but I do have to point out again that on the 1st of April, April Fool's Day, we did have the bullish engulfing, except the problem is this outside up day or bullish key reversal or bullish engulfing, they're all the same thing, the old name, new name, whatever, happened in overbought condition, very overbought condition. I nickname this a bass-backwards reversal because it's the reverse of my bearish engulfing ER sell signal. The only thing I'm missing here is the closing price was not lower than the previous day's close. You had an outside day, you had overbought conditions, and all I needed was a lower close. I didn't get it, but I've seen this happen a lot. My bearish engulfing combinations are much, much more common, but this is kind of rare, but I pointed it out, and we have a lower low again today. This could have been a top. I just couldn't peg it. Next, we got coffee. Screaming in a new high ground also for quite a long time, but also very overbought. So I've got to look for a correction. But guess what? This time, I think it's just going to come back to the top of the previous pennant and maybe bottom out there. That would be classic, and turn around and make another new high. And lastly, well, we got cotton left. Sugar. Rocking a hard spot. No real commentary. Got to wait a little bit. This, I believe, was a bearish engulfing. The high 2 days ago was 2291. The previous day's high was 2291. Nope. The exact same tick high for 2 days in a row. So you didn't have an engulfing. Very close. Lastly, cotton the rag. And we're looking at new lows, new low close. My downside objective, since I've been talking about this head and shoulder before it even got finished. I've seen thousands of these things, very short term, maybe an hour, even less. To one of them, I remember was in the euro dollar, I believe, or the dollar index. It took 10 years to form, and it still worked. Huge. All right. We're supposed to go down at a minimum to 82.90 or lower. We're on our way, but we're getting close to oversold. So don't think it's going to go straight down there, although it could, but it probably won't. You got maybe 1 or 2 more days down, then you're going to hit oversold conditions, then you're going to bounce some, maybe back up to 90.50, and then new lows and finally get to my objective. And all that would take maybe 2 or 3 weeks. And we're back to RBob. You guys have a great trading day, profitable trading to you.